Today is a great day, ladies and gentlemen. I'm not even going to say it. I'm just going to show you. Oh, best year. Oh, look, they're trying to get me. There it is. There it is. Gary Gensler was stepped down. No, I broke up with her. She didn't break up with me. I broke up with her. That's that. Wow. It's over, ladies and gentlemen. We did it. If you held your bag through 2021 and you listened to the wrong people and you rode it to the bottom and you went through the crash of FTX and you went through the despair, the decimation doldrum of the bear market, and then nothing happened, and then it never happened, and now we're finally to where we are now. If you've gone through this whole saga and Gary Gensler basically being Elizabeth Warren's puppet, suppressing XRP, trying to use XRP as the scapegoat to point to why every other altcoin is a security, which was their grand plan that Judge Annalisa Torres did not let them completely, go through with. If you've been here through all of that, give yourself a pat on the back. Give yourself a pat on the back. We have gone through hell with Gary Gensler. He protected so many investors. I felt protected. I don't know about you, but I felt protected. And it's over. It's over. I had to start the show with that. I could not be happier about this story. Thank God. And on behalf of crypto Twitter, on behalf of the crypto asset community, fuck you, Gary. It's over. We did it. Middle fingers in the chat. Find the middle finger emoji. I want to see the whole chat. Just fuck. That's what I want. I normally keep it PG on the show, but fuck off, Gary. All right. So very happy about that. Very happy. So also kind of interesting little sidestep here. Remember last week I went to that XRP movie, that premiere of that documentary called Rig from the Start, XRP Unleashed, by Fruition Productions, Fruition Films here. This movie is now available to be purchased. The day is today. It's $15. I'm telling you, get together, watch this movie. If your family doesn't completely understand crypto, there hasn't been really many positive documentaries, positive movies made about crypto. Everything's, crypto scams, crypto, blah. This is a positive thing. And I interviewed Chris yesterday. That interview will come out. I'm going to go ahead and say Saturday or Sunday. Hell of an interview. Chris is a hell of a guy. Him and his wife made this documentary, and this is their Twitter right here, Fruition Films, Fruition Productions. And check it out. Check it out. Get people together, have a little watch party. It's only $15. They spent their own money to make this movie. It was not funded by Ripple. They did not have funding. They did it on their own. It was a story that needed to be told, and they told the story. It goes really under the surface with ETHgate, the truth about ETHgate. I thought I knew all about ETHgate until I watched that movie. So guys, I'm telling you, very good stuff there. And of course, XRP is having a day here. But I do want to take this show as an opportunity to really go over technical analysis in a simple way that I haven't done before. I always kind of am on, I've been doing this for years, everything's second nature to me. And a lot of the times when beginners watch my show, they're like, whoa, what is that? What is that? What is that? What is that? And if you have to pause the show to Google something so you understand it, I would do that. If you need to take notes as the show goes on, I would do that too. All things that I used to do and still do to this day. I take notes when I listen to Benjamin Callen or when I listen to Altcoin Daily. It's important to not just to hear the information, but to absorb it and to remember it and to circle back to it and to remember what's going on. So I do kind of want to use this show as an overview for, what indicators I use, how to identify patterns, what are divergences, what's an RSI, what's a MACD, all of these kind of basics. I want to hear the basics. And I also want to kind of go into a little bit more, Fibonacci, stuff like that. So some of this might be this might be old news for some of you, but you might still hear something that you didn't know. You might still pick up extra pieces along the way. And I actually want to use this opportunity to go over a couple really hot charts right now to kind of make some predictions. All right, what's going to happen here by the end of the year? What's going to happen in the next couple months? What can we expect from X moving forward? And, I do kind of want to, preface this whole thing. Let me get a fresh refresh here. I am yet to do my next 100K by portfolio build, but for the love of God, every time I say I'm going to do it, I wait on it and then I put it off, and it's okay because, we're up 32% on that first 100 grand, and I moved the next 100 grand of Tether into this portfolio, which is why it says 232. But on the first 100K, we're up 32%. Not bad. Of course, it would have been optimal to do more earlier on. I've been playing it a little safe, better safe than sorry when you're basically putting $750,000 into a live portfolio. To no surprise, Algorand is the leader of this bag. By over 30%, Algorand is the leader of this bag at $18,000. That was a $10,000 purchase. And Algo's a dead chain. Algo, oh, really? Is that so? And now that they're revamping staking, guys, if you didn't see the interview I did with John Allen Woods just yesterday, the staking interview, John dropped so much alpha in that interview. It's unreal. I can't believe that they give me the opportunity to be the one that gets the alpha out of them, and we get to present that to the rest of the Algorand family. I am so honored that I am the guy for Algorand. I could not be more excited to be a media partner with Algorand. Full disclosure, we recently just extended my contract for another year. I believe in them. They believe in me. And when I buy $100,000 live on my channel, and I buy 7 coins for 10 grand. No, was it 8 coins? 1, 2, 3, 4. Bought 8 coins for $10,000. Algorand's leading the pack. That's why. That whole 16-cent thing I talked about literally forever. Okay. All right. So big shout out to them. Big shout out to Algorand Foundation, to John, to Stacy, to Mark, to Wasim, and everybody's just so cool over there. So big shout out to them. And I just also want to tell you guys, I'm celebrating a little bit. That's really cool that we're extending for a year on, and I couldn't be more grateful to be on the Algorand team, but as a media partner, so, here we got Render just about 50%. All right. Algorand's 80%. The Graph 40% and change. Avalanche 38%. Optimism finally waking up a little bit. It's only at 12,000 from a $10,000 buy. Optimism is the leader of the top 100 today, and that's the first chart in the TA extravaganza that I'm going to start with. Optimism, because it was in that triangle, and I knew that thing was going to break out, and it finally did. I had that alarm go off, and I said, "Here we go." So obviously, coins I'm going to target in the next 100K video: Jasmy only up 10%, Pyth just under 10%, FET 7%. All right. So Optimism, Jasmy, Pyth, FET will all be targeted again big time, because they are they have not moved compared to Render, Algo, Graph, and Avalanche. All right. So, and I'll probably buy a little bit of everything, but I will add some new coins as well. I'm kicking myself for not buying Hedera. The original plan was to do a video right away. I decided to give it time, and I'm kicking myself in the butt over not publicly buying Hedera. But trust me, I have plenty of personal HBAR. For the rest of the buys, just to go over this bag really fast, Ondo and Near were both $5,000 buys. Ondo's now just at $7,000, Near at over 6,500, almost 6,600. So that was substantial from them. Brett was actually a $4,000 buy at almost 6,700. Shiba was a $4,000 buy at 5,300. And the PHEMEX token was a $2,000 buy at 2,2. So every coin in the bag except for FET is in profit. So FET lagging behind, another one we can go in the TA extravaganza once we start that little bit later in the show. But guys, it is really cool to me that I do this whole bag here, and my favorite coin, Algorand, is leading the pack. And to be fair, I also do have a media deal with VeChain. I'm very heavily integrated into the VeChain ecosystem. I'm on calls with them all the time, and it's beyond just making videos. It's on just tweeting. When there's a team call, when there's decisions being made, I'm on the call. I'm part of the conversation, and I really appreciate that type of responsibility. And guys, I really do enjoy working with top 100 blockchains, like Algorand, like VeChain, like I have with Hedera and some of the projects under their umbrella. And I think that one day AJ might become like a CMO or something one day. I'm not going to say with who or anything like that, but I'm really learning so much from the other side of the fence with these projects. And I really think that I'm always going to be a crypto day trader. I'm always going to be an influencer. I'm always going to talk crypto. But I think one day I'm going to put on a different hat when it comes to these projects. I don't know with who yet or anything like that. I just know that it's going to happen one day. And because I really enjoy this line of work, and I really enjoy, the decision-making side on the other side of the fence. So obviously, big shout out to them. I did just recently do a tweet here about Gary Gensler. Thanks for nothing. On behalf of crypto Twitter, fuck off. Chilling, almost 100 likes, not bad. Also, what you call it, this Solana cup and handle, guys. This chart here is really interesting, mainly because we did draw this cup and handle on the show, and at 208 was the breakout point. That happened about 11 days ago. We're up 23% from the break of that neckline. It still has 57% to go. $405 for the measured move for Solana. And this is kind of showing end of 25. So in this timeline, are we going to see this kind of type move? I think Solana can go much higher than $405, obviously, but that is the measured move for the cup and handle pattern. So just something to keep on your radar with Solana there. So let's start the show here. I have the wrong tab open. That's why things got confusing for me there. So let's start by talking about optimism. All right. And of course, if there's any questions as we go, we will talk about that. All right, guys, let me check the chat here for a second. Right before I do this, everybody, of course, over 100 people here. I know we're doing the show at a different time today. It's been very busy, guys. I've been writing a 12 to 15 hour trading course with Verified Investing and Gareth Soloway and the team there. It's something I've been wanting to do for a while. It's kind of really nice to put it all down on paper, which is why I want to do like a TA overview show right now. And that has been like kind of really eating into my time, eating into my bandwidth, but that's okay because this is something that I'll be able to point to for people who really want like a complete overview that takes 12 hours to watch about everything I know about crypto, all in one cohesive, well-edited professional trading course. It will be like 12 modules. There's a lot to it, man. And I'm proud to be doing it. It's honest work. It's hard work. It eats my time right now. But hey, when I'm done, I'm going to put my feet up. I might take a week off or something like that, but certainly be looking at you guys here. So shout out to everybody in the chat. Marcel, Lee F, Amp Knight, Randall Dance, Jose, Matt B, Famous Productions, said 99K. Oh, wow. Hopefully we'll hit 100K during the show. Yeah, XRP. Definitely going to be looking at Bitcoin, XRP, everything like that. Thank you to Jackson Crawford saying that's a nice interview with the interview with John. Guys, if you haven't watched my interview with John Allen Woods, go check it out. And the thing is that Algorand is the leader in that portfolio. Guys, it's just getting started. Think about this. Last thing. Think about this. Algorand is changing the way they're doing staking. The APY for Algorand staking, given that 15 to 20% of the supply is staked, is 6.5 to 7%. It's bigger than Cardano. It's bigger than Solana. It's insanely competitive, if not the best staking. Everyone's going to want to stake their Algorand, especially since they're going to be holding it for the bull run, right? So think about what's going to happen to the price when the circulating supply of Algorand less and less and less. It gets locked up, gets locked up, gets locked up, gets locked up. Think of that like pressure pushing the price up. The less Algorand that's in circulation, more Algorand the Algorand that's left in circulation is going to be worth more. And we know it's coming. It hasn't happened yet. in the next month or two. They did want to aim early December, but it's taking a little bit of time. But we know at the very least in the next month or two, the new Algorand staking will begin. And we're going to see a lot of people lock up their Algorand. All right. And we know this is happening. And it hasn't happened yet. And we know the price implications for once the ball gets rolling. It's just getting started with Algorand. I promise you that. All right. So here we go. Yeah, Gary just confirmed he is out. Yep. We covered that in the very beginning of the show. All right. So let's talk about optimism here. All right. So let's just kind of do an overview on my technical analysis setup. All right, let's just start with like a basic 4-hour chart. All right, and this is for any beginners and an overview for anyone who's just kind of learning along the way. So this down here is Market Cipher B. It's kind of a complicated oscillator that has momentum waves. It has its own RSI that changes colors. What's unique about Market Cipher is that it literally shows the money flow of the red, money coming out, us losing money, and the green, money coming in, people buying the project. And you can kind of determine price action. You see how optimism here kind of came down and then it started to curve up right here. If you kind of took bigger swing trades off of large momentum moves from Market Cipher B, only looking at the money flow, you would be a profitable trader. Look at this right here. This on the chart right here was the moment it went, this circle I'm drawing right there is the moment it went from green to red with the Market Cipher money flow right here. And look what happened after that. Boom. 37% down in 10 days. And now look at this, right? See the curvature of the money flow right here. All right. That is when it became red to green. And the curvature is important too, because once it starts to slope down the other way, hold on, let me just look at, we're looking at this momentum wave right here. So look at not the blue, but the red money flow. Okay. And once we see the red and then it gets less and less and less and less, and then it eventually becomes green, right? But let's look at, first of all, the point it becomes green right here. And let's look at the point right where it started to slope down the other way. All right. There's a basic swing strategy with Market Cipher B right here. All right. It's not the top, but this is the point at where we started to slope the other way. Now let's look at that on the charts. So here's the point where we started to slope the other way right here. And of course, got that pickup right there. Boom, look, 19% in 3 days. And then this is the point where it became green. And although it flopped and groped around, ultimately, 12 days later, 21% to the upside. All right. So that is, and there's a VWAP in here. There's RSIs. There's momentum waves. There is a lot to Market Cipher B. But the unique thing about Market Cipher B is the money flow, which you can use on a large time frame swing trade strategy. All right. So what if you don't have Market Cipher? What if you don't have Market Cipher B? First off, click the link down below. You get 15% off because you're a member of the Grogger Nation. Get rich or get wrecked. You're a Grogger. All right. You get 15% off if you click the link down below. All right. And I'm pretty sure if you don't want to get it today, pretty sure there's going to be some sort of Black Friday sale. Pretty sure. And I've been known to give some Market Cipher 1 year subscriptions out to my Telegram group as well. All right. I'm going to do that. I'm going to go ahead and say Saturday. I'm going to put it on my calendar and I'm going to pick 3 people from the group. I'm going to put in my calendar right now, MC group giveaway. And 3 people are going to get it from the Telegram group. All right. So what if we don't have Market Cipher? Okay. Here, let me put my head back on this side. This is where I would suggest using a basic relative strength index, or an RSI. Okay. An RSI is very similar to Market Cipher. All right, if we kind of compare, let's just kind of pull this up big and then pull this up big, and I'll get out of the way here. Okay, so as you can see, a lot of the times, like let's look at this momentum wave here and here, and look at what happens on Market Cipher. Okay, and this is a little bit more exaggerated this way, where the RSI is more exaggerated this way, and this matters because the way they're calculated, the math is a little bit different, but you can still kind of see a lot of similarities, like right here, right here, and right here, and right here. You see, you get my point. It covers most of the same bases. But obviously, Market Cipher is a lot more detailed. But that doesn't mean if you don't have Market Cipher, using RSI and MACD together is a good fix if you don't have Market Cipher. But if you do have Market Cipher, still flash an RSI from time to time for a certain reason. So RSI, the relative strength index, kind of shows the strength of any given chart. All right. And right now, the parameters for overbought are set at 70 and 30. Okay. But I'm actually going to teach you a little secret to the trade here. If you come into the settings here, and you go to right here, RSI upper band, and change that from 70 to 75. And then you change the lower band from 30 to 25, you're kind of opening up that RSI a little bit, because 70-30 is good, but the taller it is, if something, so I changed it now to 75-25. So if something gets, so now if something gets overheated, it will be at 75 instead of 70. So it'll really stop like those false signals from happening. So, you know, if we look at, especially RSI is really powerful on a daily time frame, large time frame, because we look at, you know, anytime the RSI comes all the way down, completely oversold right here, look at what this was right there. And look right here, completely oversold. Look what this was. Every time the RSI, look right here, every time it hits that bottom line at 25, not 30, look what happened here. Boom. 70% in 21 days. Let's get this measurement. Boom. 50%, 52% in 17 days. Look at this one. Boom. 98% in 110 days. You get my point. RSI, it does work on smaller time frames, but I prefer large time frames to get clear signals on RSI. All right. And RSI also will show, you know, when something's overbought right here. Oh, look what happened here. Boom. All right. But all right. So here's a really important lesson with the RSI. So we established the overbought and oversold part of the RSI, but that's not the most important part of RSI. The most important part is in my opinion, is here at the 50 line. And the 50 line is, you know, the middle. Because it's a scale from 0 to 100, where 75, in my opinion, overbought, 25 is oversold, and the 50 line is what? The 50 line is continuation. Very powerful word in crypto. Right here, let's look at this pump. Right? It's a really good example of it. Let me kind of lower Market Cipher, kind of show you all of the RSI and this chart. Okay, so right here, optimism was, let me scrunch this up a little bit. It was oversold. All right. From there, it bounced up. We got to move, right? We got to move. And although it came down, you see right here, it lost the 50 line. And in a perfect world, when something's going to continue, it should come and bounce off the 50 line. But sometimes charts make their own 50 line, like their own baseline of continuation, right? Like every time it would, when optimism bottomed on the strength, it would happen at this level, actually at 40. So the 40 line kind of acted like the 50 line in this setting. And look, right here, it bounced. Right here, it bounced. Right here, it bounced. There is support resistance on oscillators, just like there is support resistance on price action. All right. And this kind of showed you oh, okay, we're not coming all the way back down here. It is holding this baseline. This is going to bullishly continue. And sure enough, look at what happened. Bang, bang, 300% in 37 days, just off that idea. All right. So always kind of look for things to, so if something's going bearish, right? Something's going bearish, like this downtrend here. Once we lost the 50 line, when it would come up, it'd get rejected. It came above it, rejected. And that's kind of bearish continuation. So you can use the 50 line to kind of determine if something's going to continue to pump or if that's the end of the pump for that thing. So, you know, that's a quick overview on a relative strength index. And then I want to show you a MACD. MACD. This is also a good moving average convergence divergence, also important if you don't have market cipher or you still just want to flash it on your chart sometimes anyway, even if you do have market cipher. So what's really important with MACD is that, so this is when someone says there's a MACD cross, right? And obviously the larger the time frame, the more significant it is. So if we kind of look at just the MACD here, okay, very similar to an RSI in its own way, in that it shows the oscillator waves themselves, right? Like an anchor wave, trigger wave, and that this obviously direction points to what? To an uptrend. All right. So if the price is uptrend, they're in parallel. If the price is coming down as this is going like this, that's a divergence. And a bullish divergence is a really good way to determine when something bottoms or when we're going to see a price reversal. Okay. So, and we also do kind of show the volume down, up on MACD, but I tend to ignore this. I ignore this because I like it better on market cipher, and market cipher is more accurate. But what I'm really looking at on MACD is the waves and then these two lines. So this blue line here, this blue line is called the MACD line. And this kind of red line is called the signal line. All right. And anytime the MACD line crosses the signal line right here, that is a MACD cross. And although most of the time this is a lagging indicator, you can still win large time frame swing trades based off of this happening. So let's hear MACD cross here. I'm going to show you so MACD cross here and the most recent MACD cross here. So I'm going to circle these on the chart, and then we're going to look up and see what happened on the price action. All right, so MACD cross here. So from that point in time, let me kind of fix this a little bit. We got this one that happened right there. We still went top to bottom 34% in 14 days. MACD cross here. And you see how where the MACD crossed, one moment. The point where the MACD crossed was right here. Oops. Right here. And this was not the bottom. You're not going, the MACD is not going to give you that very bottom. The dot on market cipher will. When market cipher prints that green dot, like I'll show you right here. Oops, oh, come on. You see that dot right there? That will give you the exact bottom. But the MACD is more important for the cross. And although it's a lagging indicator, we did the first measurement. Even from this point, we still got 37% in 13 days there. Pull this over, MACD, and the last one right here, this has been this whole move, 70% in 100 days. And, you know, and then obviously when it gets to the top, it crosses down. That's a bad thing, right? And then this cross right here, boom, we came down 22% in 4 days. And guys, these indicators are free. And it's not about just using a single strategy like an RSI, oversold, overheated, 50 line continuation, or a MACD, you know, bull or death cross on a large time frame, or, you know, a bullish or bearish divergence. It's about the combination, the confluence of multiple indicators telling the same story. All right. So that kind of goes right into the EMAs. I will very quickly breeze over this. So I use the strategy of the 50 EMA and the 200 EMA. This can work on a daily chart. And I have a 12-minute chart strategy that makes my Telegram group so much money that I literally forged this strategy out of thin air, and it works, which is the craziest part. So the red line here is the 50 EMA. And anytime the price stays below the 50 EMA, that means bearish continuation. And anytime the price stays above that red line, the 50 EMA, that means bullish continuation. All right. And when the red line goes under the white line, so we get a death cross on the 50 going under the 200, that's called a death cross. Even if you just traded that, say there's this whole move here from top to bottom was a 72% move over the span of 103 days. So let's say we just shorted from the moment the death cross happened, you would still get a 48% move in 12 days. You're not going to get the whole move, but if you just waited for the death crosses on a daily chart, you would still win so many trades. Look at this. Look at this a little further back in time. We got a bull cross right here. And listen, we didn't get it from the bottom, right? We didn't get it from here, but we got it from here. And if we went from here to the top, shit, 214% in 100 days without another cross. And look, the most recent death cross here. Look, boom, 57% in 100 days. And guys, this is a free indicator. The 50 crossing the 200 up or down, death cross, bull cross is an amazing strategy. And then the 50 will continue to help you to determine continuation or if something's reversing. And when you combine that with the RSI and the MACD and the money flow, and then you combine that with a volume profile, we always talk about the visible range volume profile over here, because what I like to point out with volume profiles is how quickly things move up, how quickly things move down. And this is actually a really important concept right now on this optimism chart that's going to make you money. All right. So let's kind of talk about this support resistance level. And guys, the support resistance level is simply when a chart continues to come back to a level. Oh, we just had a different alarm go off. So a support resistance level is basically when a chart keeps coming back to the same level time and time and time again. And this level here, you know, obviously is a very big support resistance level on optimism. It's because I move it. That's why the alarm keeps going off. So, you know, right here, it bounced. So this was the floor. It was the floor. It was the ceiling, floor, ceiling. You see how over time, it keeps coming back to this level at $1.95. All right. And that means that level is significant. Long story short, if you shorted every time the price was up here and then crosses this level down, you would have made just identifying that support resistance 55% in 39 days, coming down here 40% in 57 days. And then every time the price was coming up and then crossed this support resistance level, like a bullish alarm. All right. Just kind of really basic here, top to bottom, 151% in 95 days. And guess what? We just crossed it again. And even right here, we bounced off that level and came back up 55% in 28 days, just like that. And there you would have had to identify the reversal, because the alarm did happen coming down, but that's different because it's a reversal. And that's when you really get into the other indicators to make that decision in live time. Okay, this isn't a short, this thing's turning around. That's another thing to differentiate. But so we have identified this large support resistance level at $1.95. All right, let me just kind of write that right here on the screen. 195. All right. Screw all the extra decimals. And then at the time, we did identify this kind of local uptrend here that optimism did break out of, but ultimately came back into. All right. And what kept me hopeful here and why I didn't think this was a break of structure, one, it did not go below this low. All right. And this low is important even back here. Look at that. See how that lines up really well. And the most recent low there, again here, kind of a head and shoulders, if you ask me, and inverse head and shoulders, right? That one did not go below that. That was a big thing. Another thing on why that was not a breakdown, because the money flow. Look at the money flow right there. You see how it was red curving into the green, VWAP coming up, RSI pushing up. Man, that was not a break of structure. That was a trap. That was a trap is what it was. So we kind of had this ascending triangle, and anytime you see an ascending triangle, as in right here, it gets rejected, it gets rejected, it gets, so this level is obviously massive support resistance that we identified. And then we had this uptrend come up like this. And although it broke structure, it came back into it. And I still consider this ascending triangle valid at this point. All right. So when you see an ascending triangle pattern, all right, when the price ultimately comes in here, what you do is that you measure from the support resistance to the bottom to that low, just like right here, to the bottom to that low. All right. And that is where this line here came from, because this is the measured move. So in our ascending triangle that I drew on the screen here, we pull this up to the bottom to the top there, and this would be, you know, the upper trend line of the triangle, or the, you know, or the neckline. That's kind of more of a head and shoulder thing, but you get my point. So when we break this alarm goes off. We can assume, oh, okay, well, now let's get into this measured move. In this case, would be a 28% move up the hill. All right, so there is a kind of a lot to take away from there, right? Because you know why? Because optimism, this alarm just went off. When? Today. Today, this alarm just went off. And how much more room do we have? Oh, you know, about 40%. Back to $2.87. That hasn't happened yet. That's very likely to happen for a myriad of reasons. And so this is kind of where we talk volume profile. And that is this thing on the right of the screen over here. So this line that comes out of the volume profile is called the point of control. And that is the point where the most amount of volume, the most amount of liquidity, the most amount of money is on that chart on the order books. And just because, and generally, if a point of control is way up here and the price is way down here, we can anticipate the price pushing up to that point of control. That Pepe trade we had in the Telegram group a couple weeks ago, that was 100+% trade that we caught early because of the point of control. But in this situation, just because the point of control is below the price does not 100% mean the price is going to come back to the point of control. It could be. I mean, and this is also big support resistance right there from this touch right here. And that's something we could consider if optimism lost the 195 level, which was that upper trend line. But moving forward, let's assume optimism's going to continue given the momentum shift, given green dot on market cipher. We're still moving up in the VWAP, up in the money flow, up in the RSI. We finally had the breakout of the ascending triangle. We still have 40% more to go. And guys, a lot of times the measured moves that I was talking about, they normally stop at support resistance levels. The math just always maths out on that one. And that is kind of why things will come up and get rejected and flop and then eventually there. So we can kind of anticipate 287 being not just a point where optimism is going to go, but also a point where optimism is going to fight, because that same level for the measured move was the difference between value area high, value area mid, value area low. All right. So anything bought in value area low over time is going to be a profitable play. So moving forward, let's zoom into, say, a 4-hour chart. All right. So we kind of have, our idea with optimism. We finally broke above this line here. We know that the measured move is 40% up the hill. Obviously, it's not going to happen tomorrow. And obviously, because this thing pumps so hard in one day, it's already, kind of pulling back down, 7% from where it was. And then let me touch on the volume one more time back on the daily chart before I make that next point. So the way this works is that you see how there's less volume here and less volume here, but you see how there's a gap in the volume profile right there, and then it comes up. Well, let's look at that. Let's pull it all the way over here. See how fast optimism moved from here to here? See how fast optimism multiple times moved down from here to here to here to here to here. You know why? Because there's a low volume node. All right. And that is a very important concept to wrap your mind around. Because right here, there's nothing. And here there's money. And here there's money. But in the middle, there isn't. So it's going to quickly oscillate between point A and point B. And look here, boom, 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 boom. Look right here. It got to this level, boom, up to this level. And right here, it bounced off this, continued. Right here, it got to this level. Look at that one candle. Look at that candle right there. on the daily chart. This candle right here. Oh, I meant to brush that, not line it. This one right here. You see that? Why is that? Low volume node. Look, boom, right down that hill. All right. So we can use that to our advantage, because if we literally drew a line from that low volume node, look at where, if we align the support resistance, which is a support resistance level, by the way, right here, boom. If we align that with the volume profile, we can deduct that this level at $2.22, let's write that one down. That's now a new alarm. 1, it's support resistance. 2, it's aligned with the volume profile. And 3, this is the local high where we just got rejected from. So 222 alarm goes off. Guess what? We bounce and come up and hit this. We're going to go through this low volume node. Let's measure the low volume node from the top to the end. Is a 15% move to 257. And you know what's funny about that? 257 is support resistance right there from right here. All right. And this is how I get a lot of these amazing trade levels I give you in the Telegram group, is from doing this kind of thinking, this kind of making these connections. It's not just a support resistance level. It's also a measured move. It's not just a support resistance level. It's also aligned with the volume profile. There's confluence in levels. It's just on that one level. It's not just a support resistance. It's not just a local high. It's also aligned with the volume profile, and it's on the cliff edge of a low volume node. So we can deduct, based off of what we've seen back here, how quickly optimism moves up through this price and how fast it moves down through this price. If we can get above 222, we are going to rocket ship. And I mean rocket ship up here to 256. That's a 14% move. That might be the easiest 14% you make all run. And when the price is up here and then it comes down, the price is up here and it comes down, we hit this low volume node, guess what? Boom, it's going to run right back down through it. That's how it works. All right. So let me get rid of all this extra chart graffiti here. I'm going to keep that level though. Okay. Let me just take a second to delete some of this to save myself some headache later. But yeah, so that's just kind of an overview on how to use oscillators, RSIs, market cipher, MACD in combination with EMA, in combination with support resistance, in combination with volume profiles, and that confluence. And guys, here's the truth. What I just gave, you can sure we could add Fibonacci, Gonfans, stuff like that. But the truth is, every professional trader, their strategy is some sort of combination on some sort of specific time frame of what I just showed you. That's it. That is it. That is technical analysis. There is a little bit more to it, obviously, and you can go further down the rabbit hole with probabilities and heat maps and stuff like that. But enough to make really good trades and enough to make consistent money over time. I just gave you everything, like most of the bases. Okay. And of course it's more complicated than that, but this is the general idea. And every professional strategy is a combination of some of the things I just showed you on a certain time frame. That's it. All right. So let's talk about Fibonacci. All right. Well, from on this example, I am going to draw it from this low here, because this is as far as this chart goes back. All right. And let's kind of see how this. So what we do, you go over here, you click here, click fib retracement. You go from the swing low of the bear market to the local high. All right. And as you'll see, the 382 perfectly aligns right here. The 618 perfectly aligns right here. Our 195 level that we just broke, that was also basically breaking the 618. It's, a couple pennies off, but still close enough. All right. And so we can deduct that to get to the next level in the Fibonacci, which would be the 0.5, which is a little bit below our target level from the low volume node and the measured move from the ascending triangle, we can kind of deduct that could be a target, 263 as well. And you kind of just use this to determine, oh, okay, well, we just broke through the 618. this is the next level. Or if we lost to 618, this is where we could go back to. And look how it works. We came here, boom, kind of follow the chart with your eyes. And we got rejected from it there and boop, all the way up to the 382. And then all the way back down to the 786. And then we ranged, and we broke the 618, boom, all the way. You get my point. It's just a really good way to, it's sort of like determining support resistance, but more about determining ranges. And it's just another thing you can use to your advantage. And guys, you don't have to draw a Fibonacci from here. You can draw a Fibonacci from this low right here. Oh, not that. You could draw a Fibonacci from this low if you wanted to this high. It doesn't have to be the swing low. You can draw a fib from any low to any high and find something worth learning. And even right here, the 786 perfectly aligns with what? The 195 support resistance level. That was the same level that broke the ascending triangle, that gets us the measured move, that takes us through this low volume node, which will ultimately spit optimism out eventually around $2.87. All right. So so these are just things I want to go over, guys. I feel like sometimes I'm so far down the rabbit hole and I just assume that everyone understands what I'm talking about all the time. And every now and then it's really important for me to go back to the basics and say, guys, this is what I mean when I say this. This is what I mean when I say this. This is why. And then you really start, when we take us, literally 20 some minutes on one chart and break down the confluence of everything. That's when it starts to click, when you understand how these concepts, not just how they work, but how they work together. That entanglement is called money, ladies and gentlemen. Trust me on this. Trust me on this. All right. I didn't just become a millionaire overnight, ladies and gentlemen. This took years and years and years and years. And I wish I could have just watched that. I wish I had that to watch when I came up. It wasn't around. I had a decent instruction, but not as plainly put as that. The problem is ego. The problem is ego. A lot of TA dudes want to act like they're the gatekeeper. Oh, I can't tell you that. I can't. It's fairy dust, guys. It's fairy dust. It's just the combination of a couple things on a certain time frame. That's it. Develop your own strategy. I used a 12-minute chart because it's bigger than the 10 and smaller than the 15. And everyone's looking at the 10 and the 15. So I'm kind of behind the 10, but in front of the 15. Makes sense to me. Makes sense. All right. So going to check the chat here. Shout out to Francesco. Shout out to Crypto Pete. Hello. Gangsta Pete in the house. Love to see it. That's so funny. What time frame interval are you using? Come on, with how many hours they? Well, so it actually changes, because the point of control on the visible range volume profile is just that, the visible range volume profile. So regardless if you're on the 2 hour or regardless if you're on the 12-minute, if your chart dates back to July 1st of this year, all right, this is going to be your volume profile. This is what it's going to look like, regardless of what time frame you're on, because it's only showing you the visible range. This is all it can see, which is why there's just this one line. There's nothing up here because it can't see any of that. It's the visible range. So if you come back here and you show everything, all right, the visible range volume profile can pick that up because it's inside of the visible range of the volume profile. All right. That it's all in the name with that one. Don't get caught up on time frames. It's only what's the date? How far back can it see? That's what's important. And guys, and time frames, let's move to a different chart. But basically, guys, optimism here. Let's just give a quick final lockdown on OP. So right now, I would say optimism is in a conditional range between this local high, which is also the end of this low volume node, which is also the a previous support resistance level that is 222. So that is an alarm you set. And if this thing comes back up and recaptures 222, you go long and you target this measured move up here at 288. I'm sure it will fight in between 222 and 288, but we have that low volume node on our side and it's going to come up pretty quick. It's going to rip through 222. I would say 222 is the 16 cent level for Algorand, if that makes sense. It gets to 16 cents. That's the rocket fuel. And in this case on optimism, that level's 222. So 222 is the top of the conditional range where, see, we don't have much to go off of, right? Because it just came right up. So 195, the same level that broke us out, this would be the level where we go short. This would be the level where we say, okay, we're going to have to reassess here. So I don't care how optimism, let me fix this, pull this line over, because I was just showing the triangle there, but now we've broken the triangle, so it matters less. I do not care what happens in here. It can range between 195 and 222 all day long. I don't care. I won't trade it. I don't care. I'm going to look at optimism when either the bottom alarm goes off and I make a case to go short, or the top alarm goes off and I make a case to go long. It's called a conditional range. My trade is conditional based off of which alarm goes off first. We don't care about the range. We care about the break of the range. This saves us so much headache. This is the crux. I created the term conditional range. That's me. I made that up. Find it. Show me somewhere, please. I've looked everywhere. Because, and this saves us so much headache. Why? Because so many people are trying to force trades. They're looking at a small time frame chart, like the 12-minute, and they're guessing. They're going, it could, it looks like it might, like it could, like, no. And to be fair, if you wanted to tighten up the range on a small time frame, you could say, okay, well, it turned around here, so we could use this as a short level, given it's under the 50 EMA, and target this. You could do that, but ultimately, if you ignore that and talk about the larger time frame conditional range between 222 and 195, it saves us so much guesswork because we don't have to guess which way it's going to go. We don't have to try to finagle trades. We don't have to force any trades. It can bounce all at once, but it hitting the support resistance level that it's hit time and time again in the past, that is something significant. That is something that doesn't happen often. And we can see what happened last time it hit this level. Boom. 13% in 2 hours. That's a level you guys had for almost a month. You all have had this level because this is the same chart I used when I bought Optimism in the $100,000 portfolio build. Same exact chart. I gave you this level. All right. And it also saves the guesswork on, okay, when are we going to continue? Because I don't want to go long and have it get rejected in the middle of the range. No, I'm going to go long when it hits that level that it hasn't hit in a long time. I'm going to wait for a special thing, something that only happens every now and then. It eliminates the guesswork from trading. When you're only reacting to alarms instead of guessing in the range, who's going to be more successful? One, you're trading less. And when you trade, you're making more calculated trades because you're making your decision to search for confluence based off of a significant event. That doesn't happen all the time. And although you're trading less, you're making more concise, calculated trades. That's why I do it that way. So you honestly don't front run moves. I don't need to. My strategy works for me. And if you can find and when you're front running, that's a nice way to say, I'm guessing it's going to break through this level that it's been rejected through this time. Unless you have quantitative empirical evidence that it's going to break this level because of X, Y, and Z when it couldn't get above this level before, you're doing something I don't know how to do. And I don't know how to see the future. Depending on some divergences or pattern breaks, because sometimes if a pattern breaks before a level, you could front run the level when the level is confirmation. Sure, there are examples where I could front run, but I've done what I've done reacting and not front running. That's what works for me. High IQ, I look at it sometimes, and there's more to Market Cipher too. Here, let me go to a cleaner chart here. Let's look at Avalanche. I think Avalanche is another one that hasn't really had its day in the sun yet. So similar to Optimism, it was in an ascending triangle. Okay, this one gave us much less of a headache than Optimism did. It broke up out of this ascending triangle. This was this blue line here at $30.68. This was our trend line. Top to bottom, we did go 22% from that break. You're welcome. we are still, from the current price, 26% of way to the top of the measured move, which is just above $45. And this support resistance level here at 32.90. This could represent, let me get my volume profile. This could represent a short alarm where you could target the trend line in the event of that happening. Also kind of lines up with the volume profile as well. Or if you wanted to, from here, now that it's come down from that local high, and that local high also coincides with this support resistance level that has been even over here, over here, over here, over here, over here, over here. You understand that is indeed a support resistance level. Where's my volume profile? There we go. And that support resistance level is striated. You see how this is a difference between, so if the support resistance level was on the point of control or on, you see how this support resistance level here lines up perfectly with this? That is an aligned support resistance level. But this support resistance level is striated. So it's in between the volume profile, kind of indicating that when that alarm goes off, it's going to be less of a fight and more of a flip, because it has to run to the next level in the volume profile. So that's important to differentiate. Is this level aligned, or is this level striated with the volume profile? All right. So when it comes to high IQ, I don't use the high IQ oscillator. Market Cipher is my weapon of choice in there. I do have the high IQ for here. And I like the kind of uptrend band. I actually have learned that when it says like hard long exit, you could also, if it says hard long exit, well, I don't know, couldn't you use that as a short entry? If you're going to get out of a long, shouldn't you get into a short? Makes sense to me. So I use hard long entries sometimes as short entries, and also the arrows, man. The arrow strategy on a handful of time frames. Obviously, the larger, let me say this in bold letters, write this down. The larger the time frame, the more powerful the indication. An EMA cross on a daily chart is much more powerful than an EMA cross on a 1 hour chart. So a green arrow on a 4 hour chart is more important than a green arrow on a 12-minute chart. So the larger the time frame, the more important the indication. And that is very important when you're dealing with indicators like high IQ, because it's basically, looking for conditions, parameters to flash signals. Entry here. And when you look at a daily chart, you realize it doesn't really flash that many. That's the thing. I mean, how many arrows are there really? How many entries or exits are there really from January to now on the daily chart for Avalanche? And that's actually a weakness and a strength. It's a weakness because it's not telling you what to do all the time, and some people kind of want that, but that can also get you in trouble. It's a strength because when it does flash something on a large time frame, most of the time it's probably on point. So I don't use high IQ all the time, but if I'm contemplating going into a very large trade, or if I'm trying to talk myself out of something, or if I'm searching for confluence, I will flash it on the screen just to see what it says. It's not a major determining factor, but it does help with decision making sometimes. If I'm thinking about going long and I'm kind of humming and hawing, and then I'll flash high IQ on a 4 or 2 hour chart and I see that green arrow, I'm like, oh yeah, I'm right, let's do this. So it's kind of like a more of a confirmation thing for me. Overall good indicator, but I only use the high IQ that shows up here for the oscillator. I stick with Market Cipher all day long. And I think Ben's the same way, to be honest with you. All right, so let's talk about Avalanche here. We broke the triangle. We're at the measured move. We have this support resistance level here, and we have this local high here that's also previous support resistance. Just like Optimism, Avalanche is conditionally ranging between $32.89 and $37. And I'm actually going to move this perfectly to the $37.60. That is your conditional range for Avalanche. We don't care about the range. We care about let me get that back. We care about the break. And that's where I am with that. And obviously, guys, I think Avalanche has a lot of juice left in the tank. And what I like most about this chart, rounded bottoms pay the bills, ladies and gentlemen. And also, if you wanted to kind of say, okay, well, here's a cup. Is it going to go like that and then go? If that we have the cup and the formation of the handle, if it hums and hauls around 32 again, we could form a handle here. This is very close to a cup and handle right now. And that actually changes a measured move because it tacks on to the measured move from the ascending triangle, which is that measured moves at $45.30. So if we actually came to the top of the ascending triangle measured move, 25% to $45, and to if it forms a cup and handle and breaks back above the top of that neckline, that'd be a 60% move to $57. And that does make sense, guys, because look at this low volume node. You see how it ranged? You see how there's that little box of chop right here where Avalanche just went back and forth, 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 because that's where the volume was. But once it lost this level, look at the volume profile. See how it gaps all the way down. And where did it end back up? In this range. And where are we right now? In this range. We've been here before. The top of this range is $41. We're currently priced in at 35. And if we break this level, we get to this measured move, we are actually through the cliff of the low volume node. And then we could extrapolate that we're going to come up to here, which would be 27 more percent, taking us around $54, which would explain how the cup and handle gets up here so quickly. And now look at that chart and tell me anything. It's just a mess, but that made complete sense, right? But yeah, so keep an eye out for that. Keep an eye out for that. All right, so let's but that's where we're at with Avalanche, conditionally ranging between local high at 37.7 and support resistance level at 35.9. All right, let's I'm going to leave that chart. Actually, I'll just go to Bitcoin. All right. Oops. We're on a daily. Phew. Look at this thing, man. Look at this. New all-time high today. Hit $99,000. We literally are curving the oscillator up and green dotted here. We might hit 100,000 today. What if Bitcoin hits $100,000 a day? Gary Gensler got fired. That would just be poetic. That would just be straight up gorgeous, ladies and gentlemen. And guys, there's really no sign of bearish divergence here, like as the oscillator continues itself. You see how it's climbing. I know that there are a lot of people on the sidelines just waiting to go short on Bitcoin. And I'm just being patient with that. It is completely overheated. But just because something's overheated doesn't necessarily mean it has to turn around. It being strong is a sign of, strength. Go back and look at the RSI on Solana in 2021. That thing stayed baked for months. That's a sign of strength. It doesn't mean it has to turn around. Kind of coming into like a little local 12-minute chart here. Where the hell is my EMA? Oh, thanks for coming out, bud. Yeah, and guys, this is just really just structurally speaking, really sound little uptrend here. I mean, kind of, ascend. You could draw it like this if you wanted to, or ascending, broadening like that even. This thing's cruising in here. I would set this alarm and kind of deduct that the loss of this level, like right in here somewhere, that would probably be a good point to go short, because that would result in probably a death cross by that point. I think if Bitcoin comes, I think if Bitcoin goes below 95,000, I'm comfortable with a short to the 92s. But I'm not putting that trade in right now. I'm on the sidelines with this. Trading discovery is not easy because there's nothing else above. There's no volume up here. We don't know. What we can deduct is that there are probably a shitload of sell orders set where 100K, because it's a round psychological number that Bitcoin has always wanted to get to. I wouldn't be surprised to us see momentarily hit 100,000 and then just flush for a little bit. I wouldn't be surprised. Not saying that's going to happen, but I wouldn't surprise me. But it is really great to see Bitcoin continue. Of course, Bitcoin is sucking all the air out of the room. Wow, we've already been streaming forever, but I do want to go back and actually look at, this is the chart Benjamin Cowan gave me. This is Bitcoin dominance excuse me. This is Bitcoin dominance mixed with the total chart subtracted without stable coins. And it kind of forms a wedge instead of an ascending broadening. And this is actually, because it eliminates the stable coins from the situation, this actually makes the break of this structure would be more accurate than a normal dominance chart to highlight or to illustrate the break of structure for dominance, and the break of structure for dominance will be the indication that leads us into the altcoin bull market. And it is kind of funny, guys, like Bitcoin is absolutely running, right? But the altcoins, if you come in here into like a 2-hour, I mean, things are curving. Looking at Algorand here, kind of ranging between 19.9 and 23 large 23 cents. It's just kind of ranging. I mean, the alts aren't really popping and Bitcoin's moving. And why is that? That is because dominance is running the show. Let me here's a different algo chart. Why does that keep happening? So I can use this one to go to normal Bitcoin dominance. TCD. Okay, bang. All right. And, here we are. So normal Bitcoin dominance is still above 60%. Still above 60%. And, this is the 57.1 level. This would be the level. If we break this structure, this 57.1% support resistance would be the confirmation of losing that structure. And then obviously this will be the point we see an altcoin bull market. But honestly, my point here, guys, is that we've seen altcoins make the gains they've made while dominance is still sucking the air out of the room and while dominance is still in a bullish structure. Consequently, that means the entire sea is rising. The total chart is rising. Everything can pump at the same time. Not every pump is Bitcoin taking away from altcoins, but that is the case sometimes because it is sucking the air out of the room, and we've never seen Bitcoin this high before. What does that mean? Once people take profits with Bitcoin and turn them into altcoins, we're going to see an altcoin run like we've never seen before. Ever. All right. So keep an eye out for that. Yeah, I do. Shout out to Gary for fucking directly off there. Shout out to Randy Norman for that $10 super chat. I appreciate you, man. Very kind of you. Thank you, sir. Definitely, guys. I'm going to call it a day. We've been going for over an hour and 10 minutes. You guys are great. Thank you for all the love in the chat. I really appreciate it if you smash the like button on your way out the door. But before we go, I want to say, guys, become a member of the channel. Tomorrow, we're not doing a normal live stream. We are doing a members only live stream around 2 or 2:30. I'll let you know in the Telegram group when we are doing that live stream. It will be either 2 or 2:30, one or the other. I do want to take a second to the Telegram group. I've been getting updated graphics from my friend Ogre, who's been making them. Big shout out to you, Ogre. I don't know if this is the most recent one or not because they look very similar, but I know this is the wins from one of the weeks that have gone by here, and we've been absolutely killing it. So Telegram and YouTube are two different things. The Telegram group, there's $50 a month to try out, or it's $360 a year. There's other 3-month, 6-month packages in there as well. That does not include the YouTube membership. But to be fair, the YouTube membership is $3 a month, guys. That you can't. And some people are like, well, I bought the Telegram group. I'm like, yeah, but Telegram and YouTube are two different apps. You know what I mean? And it's also to kind of to put that wall up to get the people that don't want to focus out. That's why I do members only. And that's why I focus on members only, because I want to focus on the people who want to take it seriously. If $3 is in the way of you and your education, I don't want you in the classroom. So basically my point is that wall is up for members only, and I use the members only. The members only live streams are a direct connection to the Telegram group. They are a part of the Telegram group in the sense of content and education. That's why I formed it that way. And I also put the wall up although it's only $3, to keep the people that don't want to be in it out. And that is so the people that do have questions, the people that do want to learn, the people that do want to take it seriously, have a more intimate setting and can get through to me easier, because I do an open Q&A. People ask questions in here all the time. I can't get to all of them. I try, but I can't get to all of them. And members only, I have an open Q&A and I answer every question. And that is really big for people really trying to learn. So of course, guys, if you want to sign up for the Telegram group, I believe we've got over 40 signups in the past 2 weeks. The team told me something like that. Insane. Join us. Stop missing trades. AJAlphaGroup@gmail.com. And I also want to say there was a trade that worked out in the Telegram group. I'm actually going to try to find it really quick. I know you can't see anything just yet. 1 minute. Here it is right here. 1 second. There's this trade that worked out in the Telegram group right there. And guys, I literally was talking about this H-bar short. I was like, this H-bar short is the priority trade for today. It bounced off this 13-cent level so many times. And then, of course, instead of breaking out of the uptrend, it lost that level, shot down. It was good for a 4.6% move in the span of 48 minutes from the alarm going off. It continued after that point. I said, hey, guys, there's no shame in taking your 4% and walking. But, if you rock that trade out, H-bar's 12 cents now. We caught this short from basically 13.5 cents. And these are the easy trades that I give you in the group. I say, here you go. All you have to do is click the buttons. All you have to do is send it. But this is what we do over at the Telegram group, AJAlphaGroup@gmail.com. I also wanted to give a shout out to the PHEMEX.io, kind of my friend of a friend that is working on this project. I have been trying to stay more plugged into the meme market. It's not easy to do because there are so many projects that are not sustainable. And I will also say, anytime you consider talking about a meme project or purchasing a meme project, make sure it's not your everything. Make sure it is something, if you're going to throw a small amount of money at it, to have fun with it or to experiment or whatever. But there's been a lot of really awesome projects coming out on Solana. And I'm not saying buy this and hold it for a year. Anytime I played Pump.Fun Solana memes, it might be a couple hours. So I am kind of giving you the disclosure that, hey, play it as safe as possible. Don't do anything reckless. But I do find it interesting when there are, meme projects that I think could do well. When we know Pepe is a big coin on Ethereum, they're doing, the Pepe meme on Solana. Kind of friend of a friend running this project. I did agree to do, a 3-minute little sponsored run for them at the end of my show. Definitely check out and learn about it. What I actually really like most about this project is their, I don't follow them on Twitter. I actually went through their Twitter the other day. They got over 500,000 followers, and their memes are actually hilarious. They post memes, like crypto memes, all day long, and it doesn't end. It doesn't end. It's actually a really good time, and they are really kind of holding true to being the Pepe meme. And this is not like the original Pepe meme. This is a new one that's coming on Solana, and I think it's probably going to do well. You know what I mean? Certainly don't go crazy. Don't throw your life or whatever. But if you want to have fun with it, have fun with it. If not, all good. Friend of a friend told me about this project. I agreed to help them out. Just being a friend. But, do make the decision that makes the most sense to you. I'm not ever going to tell you what to do, but I just want to kind of point it out to you. I don't really do stuff like this all the time, but when there's a project that, when I know the person that's involved, I feel like, okay, this is something I can talk about. It's hard for me to talk about meme coins and feel safe about it, because the last thing I ever want to do is say something to my audience that ends up being bad. And my track record has been very good with day trading. It's been very good with top 100 picks. Hell, I gave you guys PAL before at 10x earlier this year. We've been making some sick calls, in the beginning of AJ Writes Crypto. And I just kind of wanted to point this one out to you, because I think this might be a meme play. I think it does have a chance. The Pepe verse game. They're giving all these airdrops away, tap to earn game, which is what are really popular. You can join on Telegram. There's the roadmaps listed, how to buy it. It's on Solana. Like I said, it shows the tokenomics. It shows the news, apply to become a contributor. I think this is a project that's doing it the right way. They kind of build it up over time, and why not? Why not? Definitely check them out, or at least give them a follow on Twitter at the very least. Give them a follow on Twitter because these memes are actually hilarious. And that's kind of why we're all in it in the first place at Pepe Meme _. So big shout out to them. And best of luck on their meme coin drop. I don't really talk about memes that much. I want to talk about them more because I know there's a big market for it. There's a big audience for it. And, I do want to make some meme calls as this bull run goes on. But hey, you can't nail them all. And the last thing I want to do is say one and then it go the wrong way and then everyone hate my guts. And that's why I've been so hesitant talking about memes. But when it's a situation when I know the people involved and I think that they're doing it the right way, I don't have a problem throwing my hat in the ring and saying, hey, this one might work out. So, I'm always going to keep it 100% real with you guys. That's always the case with me. I have full disclosure. I've never rugged anyone. I never scammed anyone. I never did any of that kind of stuff. I got here being completely honest and true to myself because I'd never forgive myself if I did that to you. I would never forgive myself. Actually, I have a conscience and I know how to make money without cheating. If you can make honest money without cheating, why would you cheat? Cheaters are for the people that aren't smart enough to figure it out. I figured it out. So, it's just keep it real, Is there a place to watch old members only videos? Yes, on YouTube. If you become a member of the channel on YouTube, you have access to all of the members only videos for sure. AJ, do you ever get into pre-sales, private sales? Sometimes, but I've stayed away from it, man. I've done some that, turned 2,000 into 20. I've done some that turned 2,000 into nothing. And I've thrown 5, I've thrown 6, I've played with it, and everyone's project's going to be so fire. It's going to be so fire, bro. It's going to be fire. And I'm just so sick of hearing that. And then I always tell myself, AJ, I think I want to learn more about memes and get into memes more because you guys want to learn about memes. My audience likes learning about memes. They want to get the ticker. They want to have fun on Pump Fun. They want to, 10x a couple $100 in a short amount of time. And it does happen. It happens every day, but it's also a very risky market. It's extremely risky. Basically, any money you put in there, you'd have to be okay with it if you set it on fire because you might not get it back. And you know that going into it. As long as you know that going into it, full disclosure. Okay. But the truth is, personally, with pre-sales and meme coins and everything, guys, I'm a top 100 professional day trader. I have an edge on the basic trading market. Traditional altcoin, large volume chart trades. I have an edge on the market. Rinse, repeat, rinse, repeat, rinse, repeat, make the money, rinse, repeat. Why would I deviate from that strategy if it works? If it's been working for years? Why? You know what I mean? But so really when I experiment, when I say, oh, let's try to do a pre-sale, oh, let's try to do a meme coin, it's me learning. It's just me learning how to do it. You know what I mean? It's less about trying to make $1 million off it and more about just the know-how. So I could, have an informative conversation with someone who, if they wanted to learn how to do it. But for me, I will be doing the bulk of my trading traditionally inside the top 100. So let me do this the right way at Jasmine price prediction. There is a Jasmine price prediction. Scroll down on my videos. It's an interview with my buddy Jesse, who got me into Jasmine. He got into Jasmine way before me. He's very informed about Jasmine. He knows about as much about Jasmine as I know about Algorand, which is why I chose to do a 2-man Jasmine price prediction. First and only video of its kind. And yeah, so there you go. Guys, I am going to run now. I will do ICP in the next show if I have time, but remind me, Lee, and I'll check out ICP next time. But appreciate you guys. All right, smash the like button on the way out the door. Subscribe to the channel. Become a member. We're not live streaming tomorrow, but we are doing the members only live stream tomorrow at 2 or 2:30 p.m. EST. Become a member of the show. Don't miss out. These are the streams where I show my Telegram charts, where I show you those levels, where I show you the trades, where I show you why things happen, the how and the why. I just gave you the what in this stream. The what are the indicators? What do they do? on the members only and the Telegram streams, I give you the why, the how this happened. So there you go. Have a safe rest of your day, everybody. Get rich or get wrecked. Later.